Welcome to Trading Lounge and the European Indices for the 12th of August. So as you know, we've been looking at this in two ways in terms of 5 waves down here for wave 1 and then an A and a B and a C wave back here for wave 2 and then moving down from that point. So that's one way we're looking at it. We're also looking at this as a bullish move to the upside as well. But of course, if we take this top here and this low here, the 61.8% comes in through here, and this market had moved through that and moved up higher here. So there is a case for a bullish move here, but we'd really want to confirm that, and to confirm it we would want to see the closest largest number, which is the 13,000, which is a major trading level. We would want to see that as support, and we don't have that yet. Yes, we have been trading long up through here, and you should have taken the money at the level, or at least a chunk of it. But take a look at that. But the takeaways here are that do we have an ABC pattern to take us up through here, and a break of that trend line would confirm that. We don't need a lot of this in here anymore. Just mapping out this correction, and in fact based on the cash market that's the high here, so I'll just put that there, and we were looking for that move up there, which we've got, so that's all good. Yeah, so the question now is, do we come down from this point, or do we move up from that point? So we'll take a look at both of these. So that's the bearish picture. And we could also say too, really, that if the 12,800 here became the retested resistance, then the market would be in a short trade setup. So we'd see the market move down and then have a bounce off the 800. So then we'd need to see it move through here, and then we'll need to see it retest at that point. Once it retests here, the reference point low here is the trigger for the short trade. Okay, pretty simple. And if that retest here fails and it moves down, well, then you're in luck, and of course the stop just goes above the old high here. And let's just look at the more bullish picture here for a moment, and then we'll come up with a strategy. So the bullish picture is that we can count this down here as an A and a B and a C wave down through here, and then looking at this as wave 1 to the upside here. Now I'm also going to adjust this here as well, so I'm going to move that to here and to here, and we were looking for a buying opportunity on the 12,500. Didn't quite get there. Some folks may have got it, some didn't, but I'm going to remove it anyway because we had long trades coming in over here. So in this instance here, we were looking for 5 waves to the upside, and we don't have 5 waves to the upside here at the moment. We've only got 3 waves to the upside here. I mean, as a corrective pattern, we can get, if this was an A wave and a B wave and then a C wave to the upside. In fact, what we need to do in that case, if I just go back to the 4-hour chart, because this will become apparent, if that's going to be the ABC pattern, then that needs to sit over here for that, and I'll explain that in a moment. Right, back to the 1-hour chart here for the more bullish pattern. So we would need to see this market basically move up from this point here, and in terms of a more bullish pattern, we would want to see a setup on the 13,000, and in that case we look for the classic trading levels pattern. So with the classic trading levels pattern, it looks like this here. So that means the arrival, just pretend this is the 13,000 here. We have the arrival, the reaction, the first high above the level, then we'll have the ABC pattern, and then we have our entry over here. So at the current moment, we've had the arrival and we're having the reaction here at the moment. So we still need this push above the level, but that doesn't give us our buying opportunity. Yes, you can trade that up there if you want, but it's not the setup. The top is the reference point, second reference point, and third reference point here. And yes, we could buy in this space here and build in, but we'd still want to see the first impulse wave up here, because if it was going to fail, then this would move up to here, and then it would drop at that point. And if it drops at that point, we want to be short under this one here. Not this one, because at this stage, that would just be 3 waves down, so it's bullish corrective. But the breaking of this one here would mean that we're going to get 5 waves down. So with that in mind, we've got the arrival, the reaction. We're looking for the first high above the level, and then we would be looking for an ABC pattern here, and then we'd see the move up there in the bullish pattern. Just bringing that to here. I think it's good to look at both of them and then basically nail down a strategy for them. Sometimes it's easy, sometimes it's hard. So in this case here, we would look at this here as wave 1 here and 2 here, and then up for 3 and 4 and 5. But we don't really want to see the 12,800 become the retested resistance, because then we're in a bit of trouble at this point. So what we need to do now is we'll go to the 15-minute chart where we had a trade on. We also had one for the FTSE as well in the same pattern. So we looked at the buying opportunity on the 12,500. We don't need that now. Also looking for another one here. We don't need that now, and I'll just remove these here. So we were looking, the first major one anyway was you might have 3 trades in here, but this was the sort of the confirmation one. So if you're long here, then we can move the stop up here, because we don't want the 12,800 becoming the retested resistance. You should have taken the money off the table at the 13,000, and I may have said that. I'm sure I would have said that. Well, you should always take money at big numbers. Let's just leave it like that. In this instance here, if I look at this as the A, the B, and the C wave here, then we would need to look at this as wave 1 and 2 here, and then up to that point. If we were looking at this in terms of the corrective move up, then we would need to put, well, the correct way to do this would be, just let me do it the correct way. Would look like this. So we'd look at that as the D wave and the E wave here, and then we'd look at 1 and 2 and 3 and 4 and 5 squashed in up here for that. So really this would become, in the bearish move, it would become the A wave here, and then an A, B, C, D, and E in here. So I still haven't done that right there. So so I will do that right. Just get that together. So the A wave there, the B wave there, the C wave here, the D wave here, and the E wave here. So basically we've got a triangle pattern coming into here. So this would be the A wave coming up here, the B wave coming to that point, and then the C wave here. And that's why it can be finished at that point. So we'll go to the tick chart here for a moment. I think what I might do is just bring up the cash market. So let me just quickly do that on a 5-minute chart. Just take a photo of that. So, okay, so this is a 5-minute chart of the DAX, and we've got, that's it there. So from this low here, I just want to count this through with you here. So from this low here, we've got wave 1, ABC for 2 here. Then we've got wave 3 here with a nice 5-wave structure in here. That's the 3rd wave to here, and the 4th and the 5th. And then this is the 4th wave here. So we've got 1, 2, 3, 4, and 5 to here. Bit dodgy, but 1 and 2 and 3 ABC for the 4th and up for the 5th. So that's the top. Then this comes down as the A wave here, the B wave here, and the C wave here. If that's going to be the bullish move, then we'll look at this as wave 1 and 2 here, and possibly wave 1 and 2 here. But this wave 1 and ABC for 2 here can be just, this will be the 3rd wave going up here, and the top of the third, the fourth, and the fifth wave here. But we still have this one here. So this is why this can be a wave 4 pullback. So 1 and 2 here, and 3 here, and 4 here, and then going up for 5 here. So that's still intact. The triangle pattern still works too, because we would look at this as the A wave here, the B, C, D, and E wave here to this point. So that fits as well there. So just thought we'd just take a quick look at that. So looking at this space here, we don't want this wave 4 move down to overlap this wave 1 here, because then we've got overlapping wave structures. And then we also need to look at this here as well. So I could count this as 5 waves down to here, but the problem with that is that this top here overlaps this one here, wave 1 here. So we'd look at this as wave 1 and 2 and 3 and 4 here, and then down for 5 here in 5 waves of 1 and 2 and 3 and 4 and 5. But the problem with wave 4 here, it overlaps wave 1 here. So I don't know if we can allow that to occur. Let me just check on the cash market again for that. That would be that top there going on to that one. So that also overlaps there as well through there. Not a very good line, but that will do the trick. So it is overlapping on the cash as well. So that just helps confirm that. So it's a little bit difficult to count this down as 5 waves through here. We could count it down as wave 1 and 2, then wave 1 and 2, then wave 1 and 2. Or we could count it down as an A and a B and a C wave here. That would also make sense. And so that would all make just the A wave here, the B wave here, then 1 and 2 and 3 and 4 and 5 here. So really we don't want this coming down anymore. I mean, in fact, this is already pulled down past its 40%, 38.2% retracement level. So we really need that low to stay in play there. And we do not want to see the 12,800 as the resistance here, because then it will become the bear market as well. So with this here, I can count it in both ways, and doing that correctly as well, because in this case A, B and C here for the A wave. The A wave here is sort of roughly the same size as wave C, so A and C are the same. It's moved back to the 40% mark for wave 4, so that's all good. So we just need to see this market move up here. So at what point can we say that well, the first thing here is probably looking at this area here, the 12.9. So we know that's the 50 and the 61.8% retracement level. So if we're going to go long here, just say, then we'd want that as support there. And as support, we want the classic trading levels pattern. This is a tick chart, so I need to draw over here. So the arrival, the reaction, the first high above the level, an ABC pattern here, and then taking that top out here and moving up with that there. And this would be the reverse here at the 12,800 to do the short trade there, of course. So come down and bounce back up, and it'll bounce there again, so it doesn't matter, and it'll come through. So you want that to lock under there for the short trade. So this here can be counted in different ways. It's only when it breaches the 12,800 would it be confirmed as being bearish at that point there. So I'm not much of a help with this situation here, because I can just see that it can be counted in different ways. But support on this level here would give you the first inkling that we could go up at that point. So you make sure you've got a nice tested support and you've got your setup right. And then on the bear side, we've got that. So I'll leave it at that for this, but I'll just recap this on the 4-hour chart here. So it's possible that this wave 1 and 2 is in play here, and we can move all the way down here. We just need the 12,800 as the resistance here, and make that trade quite small. The market will move quite quickly between 8 and 5 if it's going to drop. But there's plenty of time. We need to make sure that we've got the right impulse wave on this side for that. And on the bullish side here, if I go to the hourly chart here, now we know that if it's going to continue to be bullish here, that we would at least need the 12.9 here as the support here to get in at that point. So I will just adjust that to sitting on that 12.9 area there. And yeah, let's just see what occurs at this particular point in the junction here. So let's look at the FTSE just quickly, briefly. So the same thing with the FTSE here. It can be all of this move can be counted in the same way as well. We went long here. We want to move our stop to above the break-even point, just under here. So in this case here, we certainly don't want 6,100 to become the retested resistance. That would be the short trade at that point. And I think it's also wise at the moment to take some percentage profit right here if you haven't already done so at the 200. And I mean sort of 70 or 80% at this point. The whole thing looks bullish. The stochastics are pulling back on both of those markets. Everything's looking pretty rosy, but we may have a bit of a top in the S&P 500, and that concerns me. So the short trade here would be the same thing again. The market coming down to 100, bouncing, dropping, retesting, dropping. So that would be it there. That move there would be in 3 waves, so you may be able to get a better short trade in there by just drawing a simple line from the low and the second low there on the wave B, and then looking to short from that point there. So I'll just put that there as well. Yeah, that's it. But I can count this in the same way as well as the other markets, so we just need to be a bit mindful. I mean, to me it looks bullish. You know, to me it looks like we're going to sort of move up, but the S&P has got me bothered a little bit. So based on that, I will leave it at that, and thanks for tuning in. Cheers.